Good morning to everyone joining us in person, and hello to our virtual audience tuning in from around the world. My name is Jörn Fleck, and I'm the Senior Director of the Atlantic Council's Europe Center. And today it is my pleasure to welcome you to a conversation with Spain's first Vice President and Minister for the Economy and Digitalization, Nadia Calviño. Vice President Calviño joins us today as part of the Atlantic Council's impressive lineup of events for the IMF-World Bank Week series, expertly organized by our colleagues at the GeoEconomics Center as part of their Bretton Woods 2.0 project. The event series and this year's spring meetings come at a critical time for the global economy and especially for Europe and the transatlantic economy. In recent weeks, we've seen a flurry of developments in the economic and finance worlds. Uncertainty in the global banking system, rate hikes to fight inflation, and concerns over the long-term prospects of the global economy have impacted us here in Washington and in Europe. Europe itself is also working through challenges to its longer-term competitiveness. And more broadly, on both sides of the Atlantic, we're facing down the challenges of climate change and a growing convergence of geopolitics and geoeconomics, including perhaps most acutely, the economic fallout from Russia's full-scale and illegal invasion of Ukraine, the reshaping of our economic and industrial policies to meet the needs for the green and digital transitions, and addressing the economic practices of those who challenge the liberal economic order, of which Spain, as a member of the European Union, is a central player. And to add to the stakes, Spain will take up the rotating presidency of the Council of the European Union this summer, bearing the responsibility for corralling and keeping up momentum on the bloc's economic portfolios, including proposals for shifting member state debt rules and subsidies programs to aid with the green and digital transitions. As economy minister from a nation famous for its fabled windmills, Vice President Calviño understands these challenges perhaps better than most. She has also had another key responsibility this week. She currently serves as chair of the International Monetary and Financial Committee, the advisory committee to the Board of Governors of the IMF. You have quite the agenda in front of you, Madam Vice President, so thank you for sparing the time today to join us. For our audience, please make sure to keep up with the conversation by following us on Twitter at ACGeoEcon and ACEurope using the hashtag FutureOfEcon. And now over to my colleague, the Senior Director of the Atlantic Council's GeoEconomics Center, Josh Lipsky, to moderate the discussion. Once again, welcome Vice President Calviño, and Josh, over to you.
Thank you so much, Jörn, and Vice President, thank you so much for being here. Echo what Jörn said. We know how incredibly busy this week is and appreciate your time and being with us at the Atlantic Council. So I want to jump right in. We only have about 30 minutes for this conversation, and I want to start on Spain's economy. We just got new data out of the WEO, is published about 30 minutes ago, so hot off the presses, and I'm just going to reference it here. Spanish economy projected to grow from the IMF in 2023 at 1.5%. That's an upward revision of 0.4 from the last forecast, and outpacing Eurozone growth, which is projected to be at 0.8% in 2023. So I wanted to get your reaction to that and hear more your perspective on the Spanish economy.
Well, it's a great pleasure to be back at the Atlantic Council, and thank you very much for the kind invitation. And indeed, it's a very timely invitation because we just got hot from the oven the numbers from the IMF, which go in the same direction as other international institutions have, with an upward revision of the growth outlook for this year and a downward revision for inflation forecast, which is also good news. So all institutions agree, national, international, private and public, that Spain will outperform its peers in the European economy. And that follows through from very strong growth in 2021 and 2022, where the GDP has grown by more than 5.5%. And this positive trend is continuing in the first quarter of 2023. Actually, we see an acceleration of job creation. So the outlook is relatively positive, within a very challenging and volatile international context, of course.
That's right. And so challenges and opportunities for the Spanish economy then going forward, because if I look ahead to 2024, 2% growth, a slight downward revision, but how do you sustain this momentum that you're talking about through investments in the Spanish economy?
Well, I think the challenges that the Spanish economy is confronted with are quite common to all European economies. I would say to the transatlantic economy that has been referred. Obviously, inflation has been last year and continues to be our greatest economic policy challenge. How to curb it without weakening growth, we continuing with this positive growth and job creation dynamic. And in the case of Spain, we have a unique opportunity right now, which is the European Recovery Plan. These next generation EU funds, loans and transfers, where Spain is the front runner, and we are on track implementing a very ambitious investment and reform program, which is obviously a part of the explanation of why the Spanish economy is having such a strong performance and showing remarkable resilience in this challenging context, and also giving us a more positive outlook of a higher potential growth going forward.
How do you see those next-gen funds being invested then in the Spanish economy? Because this is something that we're hearing a lot about. How are they going to be used? Green, digital, wearing one of your other hats and responsibilities going forward?
Well, absolutely. The Spanish Recovery Plan has four main axes. Green, that's 40% of investments, more or less. Digital, close to 30% of investments, but we also have two other axes which are very important from our perspective: social and territorial cohesion. Being such a diverse and decentralized country, we need to ensure that all citizens in all regions of Spain can profit from these opportunities. And then finally, equal gender equality. We think that gender equality is one of our top priorities as a progressive government, progressive government. But also not only for reasons of social justice and human rights, but also economic rationality, because we cannot just waste the talent of 50% of our population. So we want to profit and benefit from all opportunities in our country.
So let me broaden out a little to the Eurozone. I mentioned that growth is a little slower, projected to be a little slower in the Eurozone than Spain. I know you have an extensive background from the Commission and experience with Europe's economy more widely. I want to start with the banking crisis, what we saw develop over the past month. Credit Suisse, takeover from UBS. Do you feel that the Eurozone banking system is safe and solid, given the actions that have been taken?
Well, the president of the European Central Bank, that is very well known here in the Council, and the governor of the Bank of Spain, that happens to be also in Washington this week, they've spoken loud and clear, confirming the strength of the European banking sector. And within the European sector, more broadly, the Spanish sector has undergone a very in-depth restructuring in the last decade. And that has led to a quite resilient banking sector with strong positions in terms of solvency and liquidity. But since you mentioned the volatility in the international financial sector, I would like to share a reflection with you, I think, which is interesting to look into, which is how, where these turmoil started, because talking about a bank in the wealthiest part of the world, related to the fastest growing sectors in the world, with high net worth individuals as depositors, and that's the main liability, and investments in sovereign debt as the main asset. I think that poses a number of questions that we need to work together, to work through, together, to see where the vulnerabilities are, because probably, 6 months ago, nobody would have said that it would have been there, that a potential volatility would have started.
No, I think you raise a very good point, and we've been talking here at the Council about, of course, Bear Stearns, and this is not 2008, it's a much different situation than 2008, but Bear Stearns happened in March of one year, Lehman followed in September, and we should be very cognizant of some of these ripple effects that we don't see in the immediate, because I think policymakers took very good actions, but that doesn't mean everything's been solved, and we need to take a closer look at that.
I think we have to follow these very closely as we are doing, but for the moment, the message that we get from the banking supervisors in Europe is one of reassurance and confidence.
What about reforms that have been long talked about in the European Union, in the Eurozone particularly, European deposit insurance. We saw the US step in and basically back all deposits of SVB, and there's a conversation going on here in the US about what needs to be done about deposit insurance more broadly. But there's no Eurozone-wide deposit insurance scheme. This has been talked about for a while. Your thoughts on that?
Well, yes, I have many thoughts of that because Spain has been advocating and supporting,
Yes.
An acceleration of the creation of this common deposit insurance system. I think this is going to be on the agenda again during the second part of the year. That's when Spain will hold the chairmanship of the presidency of the European Union's Council of Ministers. But I absolutely think that we have gone a long way in reinforcing our tools to have a banking union within the Eurozone. This is probably one of the key pieces which are remaining. But more generally, I think the situation is much more solid also from the governance and institutional point of view than it was 10, 15 years ago, of course.
So thinking about, since you mentioned the presidency, your priorities going forward as Spain takes over the EU Council presidency in 2023?
Well, I think that here my double hat comes into play because we have some priorities on the economic front and then others on the digital front, obviously, which is also quite hot and moving these days. No? So from the economic point of view, I think that notwithstanding all the emergencies and unforeseen developments that may happen, and that we will have to respond to in a determined and effective manner as we have done with the pandemic and now responding to the impact of the war. But generally, I think that in the second part of the year, there are many important files which will come to maturity, which have to do with the European budget, new own resources, fiscal rules, the review of the fiscal rules, also how to ensure that we have an efficient regulatory framework for energy so that we can keep energy prices low and so protect the competitiveness of European industry. State aid controls and procedures, how to make them swift and efficient so that we can also be aligned with some of the measures taken, for instance, on this part of the Atlantic. So there will be a number of files, and I think we have to take a holistic approach so that we have this new green industry deal, going forward in a coherent manner. And being the last effective presidency before the European elections, I am sure that there will be strong pressure to culminate, to finalize the legislative procedures in some key files. And then turning on the digital side, well, there are a lot of things going on these days having to do with artificial intelligence regulation, data privacy, also eIDAS, the identity in the new digital sphere. So all these files also are going to be a top priority, not only for the present, but looking forward.
And as you say, alignment with the US, because many of these debates are happening here too in policy circles, AI, digital identity, and I think if the last year has shown us anything, alignment on cross fronts between Europe and the US is to the benefit from an economic perspective. So something we can
I can only agree, yes. I think that the transatlantic economy and the transatlantic partnership more broadly is one of our key strengths that we should protect, definitely.
Now, of course, that partnership could be tested in the future, and I'm thinking specifically of China right now, which is on everyone's minds here at the IMF meetings. President Macron just in China, President von der Leyen just in China. Felt like a bit of divergence maybe in approaches when they came back in some of the comments. I know that the Prime Minister of Spain was just in China as well. Your perspective on Europe's relationship and Spain's relationship with China, and if those two are different?
Mm-hmm. Well, indeed, President Sanchez was there also a couple of weeks ago, and I believe he had a quite frank exchange with the leader Xi Jinping, and because I think that we cannot just turn our back to China and try to ignore it. It is our key trading partner. It is a very large player. And we have a shared interest, I think, in ensuring that they engage constructively to put an end to the war in Ukraine as soon as possible, and also to avoid global market fragmentation, which is going to be lose-lose for all of us. The world, we were just, before we started this open exchange, we were just saying we're living right now a massive tectonic plate shift of the geopolitical order that has been so to the benefit of our economies and our citizens since the end of World War II. Now these plagues are shifting, and we need to ensure that that doesn't mean that we are moving backwards instead of continuing to progress and bring prosperity throughout the world.
And I'm thinking about what you said about fragmentation, because my perspective is that seems to be the word of the week here in Washington. The IMF was here last week launching one of their analytical chapters around the WEO, and it was about the cost of fragmentation. And they projected potentially, if the world is forced to move into geopolitical blocks, 2% GDP contraction in one of their models for the WEO. But I just wonder, of your perspective, outside of Europe and Spain, the rest of the world, the global south, how they, from your take, are perceiving this potential rivalry that's growing and what it means for them economically.
Well, absolutely. That's a very good question, because the 2% you're referring to is in general terms, in average terms, but actually the damage would be higher for most vulnerable economies, for this global south that, as I was saying, has benefited greatly from globalization and the trade regime that has flourished in the last decades. So that's why I think it's very important, and I hope the discussions we have here this week are constructive in the sense of protecting and ensuring a rules-based trade order, which allows us to continue to bring citizens out of poverty throughout the world, to support most vulnerable economies, and to give more hope and opportunities to all of us, going forward. I really hope that we do avoid a clash and a fragmentation of these tectonic plates, and we continue to establish a new framework which is also to the benefit of all countries.
Well, that's what I want to ask you about, the meetings themselves. While you're here in Washington, the IMF-World Bank Spring meetings, you serve another role, as Jörn mentioned, as chair of the IMFC, and if you want to explain a little to our audience of what that means exactly, but extraordinarily important body that helps shape the agenda for the entire IMF. But do you think that will be the outcome? Are you more optimistic or pessimistic coming into this week in Washington?
Well, as I always say, I'm neither optimistic nor pessimistic. I'm determined to make the most of this week, and I think these meetings take place at a very important, a crucial point in time, marked by uncertainty and vulnerabilities and volatility in financial markets. Because as the war goes on, and I took this position as chair of the IMFC, just my first meeting was just after the beginning of the war, so it's been nothing but very intense since I took over, and. As I was saying, in this context of vulnerabilities rising because of the war going on, and also financial conditions tightening throughout the world as interest rates are rising, well, I think that it is more important than ever that we use our time in an effective manner this week, and that we come out with a message of confidence and a good coordination of our economic policies. Because the many meetings that will take place back-to-back in the course of the week should serve and should help us coordinate our actions to the benefit of the economies.
I fully agree, and it seems to me a big sticking point this week is going to be on debt restructuring. And we have heard this in meeting after meeting now going back 2 years, the common framework, which was designed to bring China into the debt restructuring. Do you foresee progress? We saw some positive signs for the managing director of the IMF following her meeting in China, but we again have heard this repeatedly, and we are now at a point where countries like Zambia and others are just waiting for an answer on this debt restructuring question.
Well, I do hope so, because we need to use the time to reinforce our common safety net, protecting most vulnerable countries. And debt restructuring, debt relief is obviously one of the top instruments. Here again, we cannot just ignore China. They're a very important creditor, and they play an important role in these discussions. And I hope they do engage constructively, and that in the course of the year we can provide relief, give good news to the citizens in those countries which are really going through a very difficult time because of the change in the tightening of financial conditions, and some of them also hit by climate change, which is having a very, very detrimental effect in many of these countries in parallel to the financial difficulties.
So we have about 10 minutes left. I want to get to audience questions, so those watching online, please submit #FutureOfEcon. I will look at them here. I'll bring as many as I can. I want to follow up a little bit on this China point. because one thing China has said about the debt restructuring is they want the World Bank and the IMF to reconsider the losses they take on loans, which would be a sort of reshaping of how international finance work, where typically those institutions have seniorage and do not have to do that. But it gets to the broader question of World Bank, IMF, Bretton Woods reform. That's something we work at a lot here at the Atlantic Council. You're chair of the IMFC, and I think the question I've been asking every finance minister and central bank governor who comes in is, are the Bretton Woods institutions working as effectively as they could be right now? And what kind of reform should we be considering at the macro level? I know it's also important to India's G20 presidency.
No, absolutely. I think that, and it goes for the Bretton Woods institution, but also for the G20. If they didn't exist, we would have to invent them now. I think
with that,
that they are extremely useful, and they provide a safety net to all of us as lenders of last resort that we need to protect. That is why I think that discussions on debt relief should by no means weaken the role of the World Bank and the IMF as lender of last resort of the international financial system, more generally. I think that the fact that there will be a new chair of the new president of the World Bank coming in the coming weeks, I think that's going to provide us with a reinvigorated process of review and of the functioning of these institutions. And I think that may also help have a better, more consistent and a better articulation of the relationship and the roles of the World Bank vis-a-vis the IMF. I was discussing actually with the chair of the Development Committee in my preparatory work for this week's meetings. And we were seeing, in the course of the year, I think this debate is going to accelerate, and there will be new ideas, fresh points of view that I hope will help us ensure that these institutions that have served us so well since the end of the Second World War, as I was saying, that they continue to serve us well, for the coming century.
And I agree with that completely. And as we think about those institutions, thinking about the Bretton Woods reform process, we have the IMF annual meetings in Marrakesh coming in 6 months. Long delayed due to COVID, but finally they'll be hosted in Morocco. Is it realistic to have something on the agenda for those meetings 6 months from now in terms of reform, or is that too short a timeline?
It's very challenging, but we have to do our utmost, to start with. We need to ensure that they're adequately financed and that the instruments that are in place are effective to provide support to most vulnerable countries. You were asking me before, what about the Global South, as they like to call themselves, or there's this emerging...
I don't know if it's the best term.
No, I'm not sure, but anyway... I think it's very important to make sure that they feel that the system is working to their benefit too. And so we need to ensure that the tools and the mechanisms that have been put in place. Just to give you an example, the Resilience and Sustainability Fund created by the IMF, and Spain was the first country to contribute. We have very strongly supported this, a new instrument to provide liquidity and support to low and middle income countries to invest in their resilience going forward, health, environment, etc. They are still lacking funding. It is proving to be challenging to have the special drawing rights allocation go into these funds. I think that we need to make sure that there's appropriate financing to cushion and to strengthen the safety net. And I hope we can make progress on that front in the course of the year going on to Marrakesh.
I'm glad you raised that issue on the SDRs. I think very few, if any, have actually gone out through the recycling process. We won't go too far into the weeds in this session, but there's an urgency around this, and hopefully progress will be made this week. I want to turn to some of the questions here. So one is back on the Spanish economy. Your reaction on youth unemployment. This has been a consistent issue in Spain, still very high. What are the policies being pursued to bring it back down?
Yes, I mean, unemployment more generally, and in particular youth unemployment, has been one of the imbalances dragging the Spanish economy for decades. Now, fortunately, that's why I was referring to the recovery plan and the Next Generation EU funds as a unique opportunity. We now have the resources to undertake a massive investment plan, which together with structural reforms is leading, and we see it happening, as we speak, and we see the results already, is leading to an in-depth restructuring of the Spanish economy to the benefit of potential growth in the coming years. For example, labor market reform is one of the key structural reforms that entered into effect beginning of last year, and in only 1 year we already see a massive change in the labor market. With very strong job creation, we have more than 1 million persons working more than before the pandemic. A total of 20.5 million persons. This is an all-time record working in Spain. We're at the historical minima of unemployment and youth unemployment. The quality of the jobs is also improving, and the most dynamic sectors are those linked to the new digital and green economy, programming, R&D, science. So we see a shift taking place, which is extremely important if we want to have a more resilient economy, more capable of resisting potential shocks in the coming years and coming decades.
So another question here, now this goes back global, not on the Spanish economy, but it's about the role of the dollar. This is something that's been talked about a lot, especially the past few months. This is sort of a perennial debate that happens about the role of the dollar as a global reserve currency. And the question here is, do you think the dollar will remain the world's sole global reserve currency? Can the euro fulfill some of its promise and step up as another reserve currency for the global economy in the future?
Well, I think these are two separate questions, and let me start with the euro one. I hope that the euro would reinforce its role as a reserve currency. It's the second one in the world. It has grown in last years. Actually, one of the programs and one of the projects we're working on that may come to fruition also under the Spanish presidency is the digital euro. Yeah. So all this is going in the direction of reinforcing the role of our currency throughout the world. And I hope that continues on that direction. Second issue is that there are many developments taking place right now. And I know one of your top priorities has to do with digital currencies. Yes. I think the whole process of digitalization is going to have a significant impact going forward, and the different role of currencies around the world is surely going to be one of the subjects you will be looking into in the coming months and years.
Well, I'm glad you brought up the digital euro, because this is something, as you said, we work on a lot at the Atlantic Council. CBDCs, central bank digital currency, both on the retail side and the wholesale side. And I know Spain's been involved in both bank to bank and then, of course, to customer using it. I think Europe is leading on this, and frankly, the US is further behind on this issue. So what can we in the US learn from Europe's work so far on the digital euro?
Well,
CBDC?
I think that we need to accelerate this work. I have no doubt about it, not only because of the actions that are being undertaken in China. Also, India is creating a regional currency and has a very clear plan and has been able to provide banking services to 1.3 billion persons, which is, I think, a massive endeavor and a massive success. And so things are changing around the world, and we need to accelerate our work. I think that one very important element that we need to bear in mind is to explain to citizens what's in for them. Yeah. What is this digital currency going to bring as a benefit to them? Because otherwise, people don't understand why this is going to be a change to the better, and is this going to preserve data privacy and my rights, or is this going to actually worsen my access to finance going forward? So we need to be very clear with our arguments and the way we explain the process and the benefits.
I'm glad you said that, because it can get very technical very quickly, but people have to understand what's the benefit, how is this different than money I use today? And if governments, and it's not just on central banks, I think it's across whole of government to explain that. One more question from the floor, and then I'll ask my final question since we're running out of time here. It's about the Stability and Growth Pact. So rules have been suspended during COVID, assume they'll come back at some point. The Spanish stance on returning to the 60% debt to GDP, those rules, when you see that coming back into place from your perspective?
Well, this is going to be one of the key files, and different countries and different persons are already engaging with a lot of passion. Sometimes one is surprised, about the passion with which we discuss fiscal rules.
Never surprising
in Europe,
here.
Yes. But actually, I think that we're in a better place to undertake this reform right now, because I think there's a unanimous view that the rules were not fit for purpose before, and we need to adjust them. All countries have increased their debt to GDP ratios. Actually, thanks to strong growth in Spain, we've been able to reduce our debt to GDP ratio by 5 percentage points last year. This is the strongest fall in history. And we're very strongly committed to fiscal discipline, and we'll pursue this path to go under 3% of GDP in the deficit to GDP ratio by 2025, and to be below 110% of GDP in debt to GDP ratio. But we're all very strongly committed. In the case of the Spanish government, we're very strongly committed to fiscal discipline, but this has to be achieved with growth and job creation. I think we've learned the lesson, from the response to the pandemic and the war as compared to the response to the great financial crisis, which is that we need to find a way to have fiscal responsibility which is compatible with growth. And I do think that there is a broad consensus on this principle guiding us forward. There is also a consensus to keep the 60% and 3% reference and so we just need to work around the details.
Okay, we will follow up on that.
No, I think it's going to be very challenging. Don't get me wrong,
no,
I'm joking.
That.
It's going to be intense.
We see that.
But I think there's also a good awareness that we need to avoid going back into the trenches of the past, you know. We need to find the building blocks that allow us to move forward and have rules which are fit for purpose going forward.
So that leads me to the final question. You said you were determined, you said there's a need for action. What does concrete success look like this week in Washington from your perspective?
Well, I do hope that we get to a consensus on the reinforcement of our global safety net and supporting most vulnerable countries, and that there's a strong commitment to this end, and that there is a message of confidence that also brings confidence to international financial markets. And finally, and that would be a bonus, that we agree on the coordination of our economic policies to the benefit of financial stability, but also to continuing the path of growth and avoiding market fragmentation.
Thank you. I'm glad you ended with fragmentation, because I do think that's a theme of the week. Madam Vice President, thank you for being here. We know how incredibly busy your schedule is. Thank you for coming back to the Atlantic Council. You are always welcome here, and we wish you best of luck this week at the meetings.
Thank you.
Thank you, everyone, for joining us this morning. We have a full slate of events coming throughout the week. You can find them all on our website. You can explore our Bretton Woods 2.0 project, which dives in through data visualization and research on potential reforms of the multilateral development banks, as well as the IMF, something we discussed today. We hope you stay with us throughout this week. We wish everyone a great rest of the day. Thank you.